Understanding market structure can make or break your strategy. The markets can be broken down into three different types. We have bullish, bearish, and ranging trends. It's very important that you understand these, you know how to identify them, and you can trade them in order to be profitable. Okay, so we are now on the charts. So you can see here we have a market moving to the upside. How would this be defined? Well, it's very simple. This is a bullish market because the market is moving up. To identify a trend like this, we have a high. We have the initial low. Then we don't know if this move here, this first leg to the upside, we don't know if this is just a natural move to the upside and we're going to continue to move further down. We don't know what this is yet. So we can't really go into this saying that this is an uptrend right now. So what we can do is wait, and we need to wait for this, which is a higher low. So now we have confirmed that we are potentially in a new trend, and we've come up and we've created a higher high. And this is where we can start really identifying these trends. So we've created a lower high, a higher high, and now we need another higher low. And then again, we have come up to create a higher high. So this is all very rudimentary things. This is sort of trading 101, and I expect the majority of you do know this. Now, there are very, very simple ways to trade these trends very, very quickly and efficiently. So for example, what we could do is if you were looking for this move to the upside, let's say, for example, you knew the data, the fundamentals, the macroeconomics were bullish for this market, so you were primed for a long position. You could draw a Fibonacci. Now, I won't go into Fibonacci's too much in this video because I think that's a completely separate topic, but they are very, very good for helping you find retracements and pullbacks within trends. So we can see here we've had a 50% pullback of this initial move, and this is a great example of a healthy pullback, which is a 50% move. This is risky because it's a newly formed leg to the upside. So this entry off the first pullback could just continue to move to the downside and you could get stopped out. So it's better and it's safer to wait for the next move to the upside, and that's when you can capitalize, especially if you are a newer trader. So again, let's draw this fib from the low to the high, and you can see it's just slightly off. Let's see, actually, is it slightly off? Yeah, it's just slightly off 50% pullback, but that's fine because we know the markets aren't perfect. So we have had this higher low formed. Now we can again time this using other market structure. So if we take this previous high, so the initial high, and we use this now as a level of resistance, we drag it through, you can see it does line up with this 50% level, and we've seen the market reject here. So this could be a great entry point. Now again, we can do the same thing. So we can draw a fib from low to high, and then we can draw our level of structure and we can see, does this line up? And it does. So this previous high lines up with the 50% pullback, and we've seen a reaction around here to the upside. So this is a really, really great example of how you can look for these trends. But I think we all know that the markets don't really look like this. This is a very simplified and sort of perfected version of a trend. Now, it's very rare to see the markets move in such a simplified way. So what we'll do is we'll go on to the real markets very soon, and I will show you the examples there on how you can sort of look at the markets and sort of time them a bit better. But just before we do that, let me go and show you the bearish trend and the ranging trend first. So essentially a bearish market is exactly the same as a bullish market. It's just to the downside rather than to the upside. So it would look something like this. So you can see here we have our high, we have a low. Now again, this is the initial move, so it's a bit risky to start saying the market is bearish right here. So we need to wait for this pullback. And what we've created here is known as a lower high. And now we come down again, right down here to create a lower low. And again, we've got this right here, a lower high. Now this is a downtrend, so this is a bearish market. Now again, we can look for this rejection of previous structure. We can look and see, does this line up with a fib level? and it does line up with this 50% level quite nicely. So this is exactly how you would approach it if we were looking to go for sells rather than long positions. That's the two main trends of the markets covered. But there is one more, and this one is called a ranging market. Now these are a bit more difficult to trade. So a ranging market is essentially just this, where the markets are moving sideways and there's not necessarily anything here for you to trade very clearly anyway. So you can see our levels of resistance get broken. We're not forming higher lows or lower highs or anything of such. It's just sideways movements. It looks almost like a heartbeat. Now these are markets I personally avoid because it's much, much harder to gauge what's going to happen here. And oftentimes in these ranging markets, what you will see is some sort of level of resistance. So let's just say through here, for example, and you will see a level of support. So something through here. Now remember, your level of resistance is the roof. So this is the roof of the market, and the support is the floor. It's supporting price as it's coming down. Now, what can often happen is we see very volatile pushes out of these ranges and then pull back in and back out and back in. And this normally happens on assets with less liquidity and less volume. And this is why I tend to avoid these types of markets, because it's, as I said, a lot more difficult to trade these profitably over the long term. So ideally, you want to go for more of the trending markets, such as euro dollar, pound dollar, even some of the exotic markets if you are comfortable trading those. So now I've shown you these, what we're going to do is go on to the real live markets, and I'm going to show you how you can sort of gauge these similar things. So this is a great example on gold. We have the initial leg up. So this is a potential start of an uptrend. Then we have our pullback. We have a higher high, a higher low, a higher high, a relatively equal low actually here. And this is what I was saying, the markets aren't always perfect. You won't always see those perfect examples I was showing you. So it's very important that you understand how to really apply this in the markets rather than looking at, you know, a generic textbook or images and sort of very simplified and perfected versions. You actually see the markets for how they are and understand how to really look at them and trade them properly. So you can see we have our high. We have our low down here. So this is the leg up I was talking about. Now we do have our lower high, our higher low here. So now what we can potentially look for is long positions. Now what we can do is use a similar thing that we were looking at, is can we spot any levels in our previous higher low that we can now use as a possible level of support for price. And we do have this level of resistance. And we can see we have this level here where we've seen wicks to the upside and wicks to the upside, and we do see price come back down to this level. And again, this isn't pip perfect. The markets will never be perfect, so you have to use some level of judgment here. So what we can do is, again, we can take our fib and see if this lines up with anything, and it does. So this is exactly what I was showing you, and I haven't I didn't go back and plan this exact example, so I am working off this as sort of you're seeing it. So we can see we've had a 50% pullback into this level of previous resistance. So imagine if we took a trade right here off this 50% level, we could have a stop below these previous lows, take profit at this fib extension. Now again, I'm not going to go into the fib right now in this video. That will be a separate video if you guys are interested in that. And you can see we have this perfect trade right here. So again, we can do exactly the same thing. So let me just remove the previous drawings from here. So what we can do is look and say, okay, so we're clearly in an uptrend here. The markets are moving up. We've got our high, a higher low. We've created this higher high right here. And now do we look for some levels of sort of support or resistance? So we have a level here, but obviously this hasn't been respected too well. But we also have this previous level of support through here. Now this was slightly broken, so you could potentially use sort of this level. This is all, again, quite discretional, so you need to use your supports and resistances as you see fit and work out how they work for you, how you see fit to best draw them. But this is how I draw them, so I just look for supports and resistances in the previous moves for price to use again and sort of retest. Now, as I was saying, this is sort of an equal low. This is slightly higher, however, it's not perfect. This isn't going to be a fib retracement. So again, if we draw our fib from the low to the high, you can see it's now not valid. Price just broke right through this. So for me, this wouldn't be a great trade because I trade using the fib. However, if you were just trading using sort of simple market structure and the level of support, you could take this trade here back, but take profit at the previous high, and again a stop loss at the previous lows, and this one would have worked out again as a nice take profit. So it's very, very, very simple to sort of gauge these markets and understand where they're really going. Now, of course, I'm not going to say that you can be super profitable just using technical analysis, because I'm not a technical trader. I trade heavily using economics and data, as well as technicals. So I don't have much experience on just a technical approach, but I'm sure you probably could make money just by viewing the markets like this. So now we have this. So what do we see? We have this level of resistance through here, and this is quite key. So we've broken through this level. Now we've created this low. So again, we can just take our fib and say, okay, does this line up? And it does almost. So you can see it basically did. It's like a quarter of a pip, if that, away from our fib. So this would be valid for me. So if we took this, and again, we could have a take profit basically anywhere you wanted. For me, it's always at this fib extension level, and this would have been a great trade. And this is how you can sort of break the markets down very, very simply. Now I'm going to show you a little trick. So if you go onto indicators and type in zigzag, this will line up highs and lows for you. Now this isn't ideal. This is more based on general swing highs, swing lows, so major levels. It won't mark up these perfect highs and lows as I've done it. However, if you change this setting in here, let me pull it up. If you change the price deviation for reversals to 1, it will give you very, very accurate pullbacks. So you can see it's done exactly as I've drawn it. I mean, it's really printed out every minor move, a bit more than I would, because this is taking in every single move to the up and down side, whereas I've taken the general move of the market. But this is still a great way that you can use this. So for example, if you were using this, you could take again this level. You can see we've got high. Now this high wasn't really respected too much. We did see this wick to the downside, and then we broke above, and we've retested this. So this is a break and retest, and you see the zigzag also pointed this out, so you could enter off this and then ride this to the upside. And here we go, we've got a bearish trend here on the euro dollar. You can see we've got our initial leg to the downside. We've created a lower high here, we've created a lower low, we've come up, we've created a new lower low along with this lower high, and so on and so on. We mark these up again, we have our high, then we move on to our low here, and we have our lower high. Again, we can do a very similar thing. So let's just draw our fib and see if this lines up. And it does. So you can see this 50% level through here is perfect. So this would potentially be a short straight away. We could go here again, take profit down at our fib extension, and this would have been quite a nice trade to take. So it's very simple to mark up. You can see all I'm doing here is just looking at highs and lows and measuring a 50% pullback. Now there are many ways to go about this. I'm showing you the way I do it, but I know there are traders out here that say, okay, well, there's structure here, so let's have a look at this level. Now this has been broken through, so this would be, the market has changed character. Now this isn't a strategy I trade. It's not something I know too much about, but I know that people view this as a change of character in the markets, and I don't really know how they measure that properly, but I'm sure you could go and figure that out for yourself on some other videos. But yeah, don't put too much weight on what I'm saying alone. You need to go out and understand this for yourself. Go and back test it. Go and watch other market structure videos. Go and watch other videos covering trends and how you can really grasp this. I'm going to put them all together, back test it, and see what works best for you. Because as I said, I've said this before, I'm showing you what works best for me. And I've been doing this for a very long time. And this is the most profitable way that I have found. So again, if we just look, we've got this level of structure here. Well, we failed to make lower highs, but we did form this really nice level of resistance. So again, we can just take our fib and we can say, okay, is this a pullback? Yes, this price has moved back 50% and it's formed a resistance, and the market has continued to make these sort of, we've held this downwards trend with the low here, the lower high, and this now lower low down here. So again, you could trade from here. and again have a take profit down at this fib extension. So this is the way I approach these markets. And for ranging markets, I don't touch them. So let's just see if we can find a range here. So we can. So here you can see there's not really much to trade from. We're not seeing any clear higher lows or higher highs or lower highs, lower lows here. This is more of just sideways movement in the markets. And this is, you know, it's not ideal because there's not really much to go off from here. Now, if you were just sort of a support resistance trader, you could potentially enter here. But again, do you really want to sit through all this chop? I personally would rather not. It's a lot harder to gauge this in real time as well. Of course, this is, you know, kind of hindsight. So it's easier for me to say enter off this support. But yeah, really not the best idea to try and trade that type of market condition. Yeah, but yeah, that's it for this video. If you guys have any other questions, please feel free to leave a comment, like, subscribe. You can join the Discord, link in the description. We also have a free Telegram where we send analysis, market updates and things. So you can go and check that out. Yeah, I will see you in the next video. Thank you for watching.